In this video, I'm just going to run through quickly how to trade the two types of signals. I've tried to design it to be as self-intuitive as possible. So, it shouldn't need to be a long video. If it's too long, then I haven't succeeded in that task of making it fairly easy to understand, even though I know people are going to use it in their own ways based on their interpretations and how they might like to add their own indicators on top. But let me run through the trading rules as I've set them. So, touched on this briefly in the last video, but you set the signal up, tune it, do a little back testing to make sure the forward testing settings are going to be good for the pair and the time frame you want. And you can trade it as per the signals and the information you see on screen. For example, for the trend cloud signals here, one option, breakout, long it, take profit here with the reversal diamonds. It's short-term price action reversal, and also you can use them as take profit points, although they are not explicitly for that. So you can use the bar color as an exit signal. We'll change in bar color, but I prefer not to do that, to be honest, simply because it will leave you at the mercy of a candle taking out your profit before it changes, So you're going to be having less profit in that sense in a lot of cases where price is not properly trending or you've got a late entry, for example. If you wait for a candle close, then here you've got no real profit. So what I do, even though that was a valid signal, so what I do essentially is levels, or if you've got your own stochastic indicator or oscillator perhaps, I do level to level plays. So let's mark out a couple. So essentially there was this consolidation area there. Drawing levels always helps kind of give context and structure as well. So I find that immensely useful. So the collection of highs there. I know I'm doing this in a little bit of hindsight, but you can see here, just by marking out a couple of levels very loosely, that would not have been a good play to take. It needed more candlestick confirmation, but by that point it's reversing. So, sorry, let's get rid of that. What I should have done was mark this sort of region here. Okay, so taking this trade here, we would have been looking at what was happening to price in this area. So, as well as support and resistance levels, understanding price structure is incredibly important to making this script work for you. Because all indicators, trend-based or whatever, they're all lagging indicators. So you need to understand what price is doing, where the levels are, otherwise no indicator is going to work for you. You need to understand these key lessons. So here you can see with these levels, roughly here, this would not have been a good additional order to ape into, because price is jumping around a little bit, even though it's probably looking like it's going to go down. I would say it's probably going to nip up for one last test at this monthly and weekly level right here. I don't think it's done here just yet. So this is one way. Your own support and resistance levels. So a nice quick easy way that's built into the script that I've touched on is the green and red confirmation line. Now we've done a little bit of tuning here, like from the last video. So you can see this is a helpful way of putting an extra layer of trend information on there. So you can see that was not a good trade to take. This needed a little bit more confirmation, but buy signal, it's turned green, go. First target would have been here, second target would have been here. That's where I would have put my initial targets out initially. And I suppose maybe third target, around there. And then moving the stop behind this green confirmation line as you go until you're ready, until you're ready to take profit at these different levels. I would have ignored the first one. I would have just known if it's beaten this level, it's going to go up to here, or even higher. And actually eventually did. So it's tapped here before it's properly come down. So you can see this green confirmation line has kept you in the trend for maybe a little bit more when the candle colour started changing to add on to your long if you wanted to do so. I'm always in favour of just taking profit and taking that money, putting it in my bank account, rather than just holding for whatever I think is going to come in the future, whether it be like 50k, 60k and go back to 70, even though we're on the daily. So you can still scalp using the daily time frame with this script. So that would have kept you out of this trade, which was quite rightly a delayed trend signal, but it's hit this support and this area of support. It's got enough liquidity to push right up again. So this one here, trend was still green, then it's changed. So you might have spotted this with a lower time frame chart alongside, say like the 6 hour or 4 hour, that price was continuing to go down. But on close of this candle, I would have gone for a short. And then when I would have seen these two printing here and this candle reversing and this other candle here, and obviously I'm going off my own support resistance area, so I've got maybe one there loosely. Yeah, that's probably where I would have come off. Again, in hindsight though. I would have scaled out straight away. So when this is printed green, got 2 sets of confirmation, that's a good long. However, I would have been wary of this region here. And quite rightly what's happened is price has pushed in, sellers have just tried to hammer it back down, but the buyers are too strong. It's gained a foothold of support and pushed up. And then where are we now? We're into this region here, where it's deviated into it, and it's basically been slapped down out of it, and that's kind of leading to where we are right now. So you can see that candle there was quite important on the daily, and I would actually say this one right here. This one, hate those candles, wiping liquidity both sides, but that was the key candle right there. And then when the trend has changed on the bar color system, it's going to start coming down, and obviously it's going to head for this area straight away. Deviated again. So these are just deviations. If we're pushing down below, it's pushed up into here again, slapped down again, and I think it's probably going to come up for another little pop again. I wouldn't be surprised with Bitcoin. It just likes to take liquidity as much as it can from both sides. So that's how to play the trending cloud signals. Levels, confirmation, and your own understanding of price structure. Now if we go to the the volume bands and trending, scalping, buy sell opportunities. We can use confirmation lines again. The rules are still the same and totally valid, even though the signal placing is different. We can still use them because these can be sharp entries. Same with the trend cloud signals. They can be sharp entries, but by the nature of that and the calculations, it's also going to give you bottom buying entries. So you get top and bottom buying entries as a result of this kind of strategy. Not always the case, but it will happen. So like there's a good example. So it gives you your sharp long in the right place, but it's also giving you two bad trades here, and I'm going to say here. Even though it's meeting the conditions, price action and price structure, that context is not coded into indicators really. So that's why we need to have two sets of confluence. So we have that on close right here. We had a sell signal previously. It's heading into the volume band, which is turning negative. So you can see it's being dark green. So that would have been good for a short up until there. I would have been wary. Because this is dynamic support and resistance, I would have expected a bounce and push up. But you can see we're still in this overall trend downwards. So the next time we got a sell, I would have shorted it. Easy short into here at the very least. And that is 25%, unless you decided to keep a hold of some of it. But then you got your support and resistance levels. Let's just frame that. You can see here, there we go, it's bouncing in this range. And I guess that is the sort of the mid-range level right there, until it's turned around. We've got some push up back into here, roughly. Deviated it, come back down, support, retest, push up again. So what would I do here, for example? You could probably capture this on a lower time frame. If you're going off bar color candle change, you can have a cheeky long into about here, but it's very risky, and you have to expect that it could just dump down at any moment, to be honest. So that, again, is a way to play these types of signals. You can play them the same with your own as the trend cloud signals with your own support and resistance levels. That works quite well. But again, understanding price structure will enable you to interpret how these signals are going to work out the moment they print. And combine these signals with the volume band as well. So this is a magnet for price, more so the green one. Because price, you can see price tests it again and again and again. Like most mean reversion types, it will always test it. So you can see this is a perfect example of it right here. Pushed up, hit this one, retest, push up again, coming down, retested the bottom of it, rejected the top of it, retested here, pushed up again. I would have marked out that high as a target, pushed up, 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 and then come back down to retest it again. Test, 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 fail, and then we wicked into straight here, the long-term volume band. Okay, so those are the default rules to play by for both the two types of signals.